Good morning, this is Mayor Valensky with Driving Markets. I hope you're enjoying all these broadcasts and all the media that I'm pushing out there. So any comments, or any positive comments, you've got even negative comments, you can put on and ask me where to elaborate on, where to drive, where to push with the emphasis on financial markets. More than happy to hear from feedback from the listeners. Also, if you're not subscribed, you can subscribe. That'll help the numbers and help me boost the media publications. Okay, remember, anything said in this piece is not an investment advice. I'm not a financial advisor. Any gains are yours, any profits are yours, any losses, unfortunately, are yours as well. It's purely an opinion on financial markets. Let's get moving. So yesterday, Target, one of the biggest US retailers, came out and said that they sold their inventory for 90% loss, which is huge, in order to clear out all the dead wood. Well, it might not be a bad move if you think about it, because if a company or business is holding onto a huge inventory that is just taking up space, taking up time, taking up resources, and they're not selling it, well, sell it at a discount, get rid of it, and effectively start again. So even though the shares went down yesterday over 5.5%, it's probably generally a good move. However, there is a mixed bag of results from retailers across the board in the UK, in the US, and in Europe, but they seem to be having a tough time. Some of them are reporting very good results, like Walmart in the States produced pretty good results this week, and the shares went up, and that gave a boost to financial markets. And then you got someone like Target, who's the same size or even bigger, coming around saying, yeah, know what, we're actually selling our inventory 90% loss. So big mixed bag of economic and corporate news, which is confusing traders, confusing investors, and not too sure which direction the market's in. You have to remember, the market's had a big run in the last couple of months on the back of oil coming down. Talking about retail sales in the States were expected to grow 0.1%. They came in as flat, and that sent the markets down because, again, they're concerned, are we going into recession? In my opinion, we are. I think inflation is much higher than it is. Then quoted, the governments and the Central Statistics Office are manipulating the numbers in order not to frighten overall financial institutions and Joe Public. In the UK yesterday, inflation came in at 10.1%. I've been saying that for a while. It's going to be above 10%, and it's going to stay above 10% going forward. Andrew Bailey at the Bank of England and the MPC team are going to have to decide what to do. They're probably going to increase interest rates by a wimpish 50 basis points, 0.5%, which is just simply not enough. Rates need to go up by at least 0.75, probably 1%. Remember, from the beginning of the year, if you follow me, I've been calling interest rates up to 3.5%, 4% by the end of the year, where all the economists, analysts were saying not more than 1.5%, and they've got it wrong again. So all these analysts that are making $1 to $2, $3 million a year, they simply don't know what they're talking about. Inflation is much higher than being stated. You ask anyone how much money they have in their pocket at the end of the day, and they're just spending hundreds of pounds on the same items that would have cost them a lot less a year ago and 2 years ago. So you can't tell me inflation's at 10% when really it's running at probably at 20-30%, which I've been stating, and I continue to state throughout the year. That's running at 20-30%. The cost of living is just going through the roof. Looking at oil, I'm a big fan of oil. It's come up all the way down to around about $92 a barrel from its highs, but the uptrend is still there, and it's likely to go higher and break through the $100 a barrel pretty soon. The thing that's held it back was China this week has reduced interest rates, and that sent a shiver down the back of investors, simply worried that maybe China's going into recession, and I think it probably is. If it does go into recession, it's going to have a big impact on global markets and other economies, because they're a big consumer of commodities, whether it's the metals, the golds, the silver, the platinums, the nickels, the lead, etc. China just sucks everything in. It was China who saved the global economies back in 2010 when everyone was on their knees. China came along and just started buying in everything they could, and that helped to send markets north and send markets up. Now China's in a very difficult position. They're in continuous lockdown. Their factories are shut down. The supply line is frustrated. And as long as that supply line is frustrated, then inflation is going to go higher. And the supply line is frustrated. So China is probably going to go into recession, and that's why they reduced interest rates. Meanwhile, in Europe and in the UK, you're also going to have a very, very tight position as to what the central banks can do regarding interest rates, and they really need to push them up higher. It's painful for me, it's painful for everyone, but rates need to go higher in order to combat inflation at this stage. Otherwise, we're going to have official inflation at 20% and unofficial inflation around about 50%. Taking a look at Bitcoin and the cryptos, Ethereum. So what you've got there is you've got Bitcoin came off the highs. It's now down to 23,400. I've been calling it a sell in my opinion. I still think it's a sell, and I think it's going all the way down to below 20,000 in the near future. In terms of high-tech Nasdaq, in terms of the Dow, they look like a sell. They've peaked. They look like sell at this area. Probably good opportunity to go short. If you're looking to trade, that's the area to go in. Sell the Dow, sell the Nasdaq, sell the S&P, take out some put options because the market's going to correct itself significantly. This is Mayor Valensky, Driving Markets. If you're not subscribed, subscribe. Let's hear your views, and let's see which direction you want to take this broadcast. Have a good day.